Morning, everybody.
Good morning. Can you hear me?
Yeah.
Good morning.
Sweatshirt.
Nice sweatshirt. How'd you know what I was wearing?
I might have an idea.
Good morning, guys. Today is February 11th. It is Sunday. Hope everyone has had a good week and a weekend in the markets. We will give it just a minute and we will get into it. Today's Super Bowl Sunday. Who do you guys got? Chiefs, 49ers? Curious to know. I hope the 49ers win, but I know that the Swifties usually never lose, so we'll see. But we'll see. I'm going for the 49ers though, so would like to know your guys' take. Let me turn this.
Let's see.
Good morning.
I'll have to give a few minutes for folks to come in. I guess we're still sort of sorting out how to do the weekly calls now that we're on Discord rather than the website. To get that communication out. To make sure everyone can be on here at 10. We'll give a few minutes for people to come in.
This is usually a pretty jam-packed Sunday for most people, though. Some people are doing Super Bowl parties. Some people are out shopping, getting stuff ready. You'd be surprised how many people watch the Super Bowl. People that don't even watch football throughout the entire season watch it. So I have a feeling a lot of people will be watching it this year, especially with Miss Swift. Did you guys hear have you guys heard the conspiracy with the number 13? Henry, have you heard that?
I haven't.
So Taylor Swift's lucky number, I guess, is 13. And they're playing the 49ers, and 4 plus 9 is 13. And it's the 58th Super Bowl, and 5 plus 8 is 13. And she's performing in Tokyo, and the flight from Tokyo to Nevada for her to catch the Super Bowl is 13 hours. And she has attended 12 football games. The Super Bowl would be her 13th. It's taking place on February 11th, which is, if you do 2 plus 11, that's 13. So it's just like everywhere. These Swifties have gathered all these statistics as to why the Chiefs are going to win. But I want the 49ers. I like the devil's advocate. I like the Brock Purdy.
Yeah,
Brock Purdy, the starting quarterback for the other team's his number is 13. But we shall see. Good morning, everyone. As you're coming in, we'll give it just a minute or two more, and then we will get into some news. Actually, before we start, I'm going to go grab a water really quick.
Let's see.
All righty.
All right, yeah, folks starting to make their way in.
Shall we go ahead and get started?
Yeah, why don't we get started?
All right. News. All righty. News for the week. On Monday, we have FOMC member Barkin speaking. He or she, I think it's a he, spoke a couple times last week. He will be speaking again on Monday at noon. Other than that, there's no news on Monday. On Tuesday, you do have CPI, core CPI, both month-on-month and year-on-year. So 8:30 a.m. on Tuesday, please be aware of that. That's obviously a very volatile one. Do not trade or be in a trade ahead of that. Let that kind of play itself out. Wednesday, no news. Thursday, you got some red folder news being released at 8:30. You've got core retail sales, a manufacturing index, regular retail sales, unemployment claims, and a manufacturing index as well there. So all that's being released at 8:30. At 9:15, you have a industrial production month on month being released, and then you have another FOMC member speaking in that PM session at 1:15. And then on Friday, you've got PPIs, core PPIs, both monthly, no yearly there. And then you've got building permits at 8:30. And then at 10 a.m., you've got some preliminary consumer sentiment at 10, both the sentiment and the inflation expectations. Other than that, that's it. So we do have CPI being released today. That'll kind of be the big caution for the week. Other than that, it looks like for the most part, a lot of the news this week is going to be released prior to equities open. So just keep that in the back of your mind. A lot of the red folder this week is going to be released at 8:30 prior to that 9:30 open. With regards to red folder news, the only red folder news is going to be on Friday at 10 a.m. That's not released pre-equity open. So just keep that in the back of your mind. Any questions, comments, concerns there? All good? All right. Well, we will go ahead and get into the DXY. Okay, dollar. So on a monthly, we obviously have pushed up into this monthly SIBI, right? We've been expecting it. If you want, I can draw it out for you. We pushed up into this monthly SIBI. We are still kind of hanging below it. We still have 18 days left. So waiting to see if we want to close back up in it or if we still close below it. On a weekly is really kind of where I start to dial in what could potentially happen. We obviously have this weekly SIBI 2. You can see how sensitive we were to the consequent encroachment of it. Now we're pulling off of it, right? Same thing we've already noticed. Where are we coming from? We're coming from this inverse SIBI in here, pushed higher. Now we're kind of just bouncing in between here, but we're coming off here. We closed the week below it. But notice how, yes, we closed the week below the SIBI, but notice how we still closed with an up closure, right? This candle still closed higher than where it opened, right? The close was higher than the open. We still closed with an up closure. So really, we have now made a BISI, right? There's a BISI right here. So I'd be curious to see where this candle closes this next week. If we do close inside of it or above it or below it, I'd be curious to see where that plays. I'd also still be watching this candle as a breaker, right? We've pulled outside of this candle, so we could use this as a breaker or mitigation block, however you want to view it. But in reality, my main focus is just seeing how price wants to play in and around this weekly BISI, but more importantly, this weekly high, right? This previous week's high. If we go into the daily, same thing here. So notice how this was not, we ran the stops on these highs, right? Which happened to be right at the consequent encroachment. Closure stayed below it. We have displacement in here. So we do have two BISIs in here, which is really where you see that it makes up that weekly BISI, but you've got a BISI in here, and you can see for the most part, candle closure has remained inside of it, but you also have another BISI right here also. And you can see how we have been very sensitive to that one. I would like to see if price wants to get a little bit more heavier to the downside just to refill this previous week's high, kind of like we saw in indices this week. If you go from the low to the high of the most energetic price swing, and you look at the equilibrium, right? It's in and around the vicinity in close proximity to this previous week's high. So I'm curious to see what that could potentially look like. And we also have the monthly open, and I'm keeping that drawn out also to see if, for whatever reason, when the month closes, where do we close with regards to the monthly open, keeping that power of three concept here. But other than that, that's really it. I do see price going higher. It just depends on how this week goes, right? You can see after we came off of this, right? yes, we had a reaction, but we did not have displacement really following it, right? There was no displacement off the consequent encroachment of the weekly. So we could very well just spend the week coming down in here. Now it is CPI. So if we come in here, right, something like this could potentially unfold, right? We could come back up here and take the highs. CPI will kind of tell us where that displacement is going to potentially occur. And another thing to note too is why I'm expecting price to potentially pull higher is we still have all of this left over, right? We still have all of this inefficiency left over. You can see that we also have a volume imbalance right here. And you can see we've offered sell side, but we would like to offer buy side to fill that volume imbalance. So that's something that I'm curious potentially to see there. So I'm going to wait. Obviously, I always will wait till post CPI to see where that displaces. If we can get some displacement higher, see what that kind of does. As you note, indices have been going higher. We still are kind of in that mixed market right now, but it is kind of starting to at least show us a little bit of correlation. As we came off of this, indices went higher, which is good. Price didn't necessarily go higher on dollar this week, and indices did. So that shows that we're kind of slowly getting out of that mixed market tendency, which is good. We'll keep that. That'll kind of get clearer and clearer as the weeks go and the days go. So I'm keeping an eye on that, and I'm just still watching to see if we go lower, our indice is going to go higher. And if we go higher, and if we do see a run higher on dollar, right, as I'm kind of expecting, I'm curious to see if we start to get a turn on indices. Am I saying we're bearish on indices? No. Am I saying we found a top on indices? No. But at the same time, I'm curious to watch this dollar to see what it can potentially do, right? If we get back below these lows, I'm very curious to see what that could potentially entail, right? If CPI does displace lower, right, then I'll use whatever displacement to see how we respond in there, right? So if we create displacement down in here, right, and we come back up into it, I'd be curious to see how we respond to it, right? Do we use it as resistance and go lower, right? And does that show within indices price going higher? Or if we do displace lower and we come in here and we fill this level and we recover well and we come back above this level, right? Do we use it as support and go higher, right? Something like that. So just keep that in mind. That's something that could potentially occur. CPI, I'm not sure what it's going to do. I have no clue. I'm going to wait until CPI releases. That'll kind of give me a little bit of a prerequisite and narrative as to what could potentially unfold, right? Is CPI going to do the manipulation, or is CPI going to kind of cause that displacement higher, right? Usually CPI is a one-directional move. So sometimes that's a big Judas, or sometimes that's showing us the direction for the week. So going to kind of keep that in my eyesight this week. Other than that, there's really nothing else. I'll pop down onto a 4-hour. You can see that we do have this big displacement in here, right? We've got a big BISI in here. We also have a breaker right here, right? So we've got a breaker right here. And then inside that, we also have another breaker in here, right? So just kind of using these 4-hour breakers to see if and when price would want to come into it. If you use the most energetic price swing, right, that kind of sits in and around here. So really going to be curious to see if price does want to get down in here. Do we want to use it as support and go higher? That would kind of be my first stance, gun to my head, what could potentially play out. I could potentially see this play out. Now you do have relative equal lows in here too. So if price does displace lower, that could be where we target for the sell side. Other than that, that's it for me. Does anyone have any questions, comments, or concerns? If not, I will pass it. What indicator do you use for monthly open? I don't use any indicators. I actually just drew it out. So if I go to the, if I go out to the monthly, or the weekly, excuse me, you can go to the monthly or the weekly, and I'm really just getting, I guess it's on the daily. I'm just getting that first daily candle from the month, right, February 1st, and I just grabbed the open and extended it out. I didn't really use any specific indicators. I just grabbed the first day of the month, and then from there, just grabbed the open. And then same thing with previous week's high. I'm just marking it. It's just a manual drawing. I'm just grabbing what that previous week's high looked like. And I've said this before too, like my previous week's high isn't necessarily always the actual last week's high, right? Previous week's high is any weekly high within the previous 3 weeks, right? So it's just it's a previous, not the previous week's high. Other than that, that's it for me. are you, Henry?
All right. Everyone see my screen?
Yep.
Can you hear me okay? Good. All right, cool. Okay, so starting with ES, we've gone ahead and made new all-time highs like we've been expecting. Bullish order flow, right? We've got the new BISIs being created to the upside, and we're getting candle closure above prior candles as we continue to work higher. So all we look for is inefficiency and liquidity above the market. Being right here, there's no inefficiency left within this. You can view the wicks, and you can be taking partials and wicks along the way if you're participating on the long side. But when you don't see any new inefficiency in the form of a fair value gap, then I just look to where does the liquidity reside, which is going to be above swing highs. So we have all-time highs right here, and we reached into that in the form of buy-side liquidity up there. So now we're trading through all-time highs. So far, seeing candle closure above it. We do still have 18 days left in the month. But now we're starting to form new market structure on a monthly basis, right? We do have inefficiency that resides within here. If price is to make a deeper retracement as we get into the middle to later part of the year. But we also have this up close candle here being the mitigation. So we have a low, high, higher low, trading through it, looking to the left and finding that last up close candle within this price plane. So we can continue to accumulate within the range of this candle right here, and then continue to press higher, assuming that the dollar does turn off the monthly CIBI and start working down toward the lows. Then we could see a continued price run in the indices off the mitigation block. All right. Okay, drop down into the weekly from here. You just want to be aware of the fact that we have new inefficiency forming on the monthly. So we have these ones here that are already existing, and then this one here between this candle's high and this candle's low, that assuming in 18 days this candle doesn't touch all the way to this candle's high, you'll have a new inefficiency right there. Okay. So you just want to be aware of what inefficiency does exist below the market, because if you start to see retracements, those are areas where price can gravitate back in toward. On a weekly basis, we are continuing to trade higher as well, working out of this weekly BISI right here. You can see how we just barely tapped into it right there. Institutional order flow entry drill, and worked higher right away, creating a new inefficiency. That's what I like to see right there. And then trading up into the buy side. So now this candle's closed. We have a new BISI below. So you want to be aware of that on your weekly chart. If you are to see a retracement in the coming weeks and it starts digging through discount arrays on a daily time frame, this is where it can reach for lower. Okay. So I'll jump into a daily now. And these are some projections. We can get to that in a moment. Now that we're trading at all-time highs, just kind of looking for where price could trade to next. But we'll just walk through the candles first. So here is that last week dropping down into the weekly BISI, trading higher, creating the daily volume imbalance. Here, tapping back into it one more time in the daily volume imbalance, then working higher up through the buy side. And then you can see here on Thursday, trading down, but not all the way to this candle's high. So we create a new BISI within here and then continue to expand off of it. So you want to be aware of this on your daily time frame, because you have your previous week's high right here overlapping with that inefficiency there in the form of a BISI on the daily chart. So if price is to retrace back toward this candle's low, you'd have sell side under that low and then this inefficiency below that price can trade into. So you'd want to look on your 4-hour chart. So you drop down one more and you just see what inefficiency exists between here and where price is now. So there's nothing on the 4-hour at the moment. There's no inefficiency. So you drop to the 1-hour and see what exists within here. Okay, there's the small BISI right there and there. So if you start to see candle closure through these and then see them acting as inversion, then you can start working back down towards sell side below previous candle lows, and then you'd have the daily inefficiency below. Because price is always going to gravitate toward the highest time frame area of inefficiency or liquidity. So if it's working through a lower time frame inefficiency, that means it's gravitating toward a higher time frame one. So if it's going to be cutting through all this, then it's going to be going to liquidity and inefficiency below. If you see this continue to support price, or anything within this range, support price and create new displacement higher, then you may not see that immediate retracement back down into here. And like we've been talking about for the past few weeks now, when we're trading at all-time highs, you just want to continue looking for long bias setups until you're proven wrong in several instances of price trading through 4-hour, daily, weekly PD arrays that you'd expect to support price higher. Then you can start looking for shorting opportunities. But as far as where we're at now, trading at all-time highs, you want to keep your attention on the long bias. If you do look for anything on the short side, it shouldn't really be treated as anything more than a scalp opportunity. Otherwise, focus on long opportunities. That's where you're still going to see the largest moves within the range. Okay. And then just looking at projections here, these are the ones we've been talking about for a couple weeks using this fulcrum point, swinging it up to 1 standard deviation, which we reached to there. And then we've got 1.5 here, which we fell just shy of on Friday. And then I'm also using this daily fulcrum point from here. So the low all the way up to the high, same deal, like the swinging door, flip it around, you get 1 standard deviation. And that's exactly where the high was formed on Friday. So you have 50.48.5, and the high of this candle is 50.48.5 as well. So if you see closure through that, then we just start to look toward the standard deviations above. So you have 1.5 up here. And then I'm looking at both of these, pairing them together. And then you can quarter these as well for more price targets. So drawing your fib between them and then putting on your 0.25, 0.5, and 0.75 projections. Any questions here on ES?
Henry, if you go back to that, the prior time frame, I think it was the 1 hour.
4 hour or the 1 hour? Sure.
Yeah. In this, when you look at it, for the dealing range, will you take the wick, the big wick that was formed at the bottom? Yeah, right there for the dealing range, or the swing low, which is even to the left or near that gray box? Like what? Yeah.
I'd work off this. So I'm always working off the most energetic price run. So where are you seeing price running from and creating the new displacement? And the first swing low that you see is right here.
Oh, okay.
So
The most energetic. Okay, got it.
So all of this is mostly just consolidation. And then you do start to see a price run from here, but you see another retracement within. And so I'd work from this dealing range on an hourly basis. Of course, you want to work up through your higher time frames too, because if you're seeing price drop deeper into a discount on that hourly dealing range, you can just work to a higher time frame and still see where does your discount reside within those higher time frames. Because like if you look at a daily chart, for example, you don't have a discount of a dealing range until down here.
Right.
Right. But price doesn't need to come all the way down here immediately in order to keep working higher. So you want to use those lower time frame dealing ranges as well. So yeah, I'd use that low up to this high.
Yeah.
Any other questions here on ES? I'll go to NASDAQ. Looks good. All right, cool. Mostly the same deal on NASDAQ. All the same PD arrays have been trading for the most part, and we are also trading at all-time highs. So still just looking for those projection swings above to be reached. Let's see on NASDAQ on the monthly, starting the monthly. We also have a new inefficiency forming here. There are 18 days left, so this is not a fair value yet, but there is inefficiency there through the understanding of that price has traded higher here, but there's no overlapping wicks. So there is inefficiency there. And if price is to trade all the way down to this candle's high, then you have an immediate rebalance, not leaving any inefficiency behind. If this candle closes without going to this candle's high, then you'd have a new BISI within here and an area that price can gravitate back toward if there is a deeper retracement. So just being aware of the fact that that is forming there, but no fair value gap quite yet. Weekly basis, still trading off of BISIs below. Okay, we've been working from this BISI that we saw within here, trading all the way down to the low end of it, working off higher, and then utilizing the consequent encroachment nicely inside this inefficiency here between this candle's high and this candle's low. Okay, perfect delivery right there. And then trading off of it, we haven't created any new sort of fair value gap within here yet. So if we are going to continue displacing heavily toward the upside, it would be great to see another inefficiency form within here, meaning that this new weekly candle does not come all the way down to the previous week's high. Okay, it can come down, touch it, do an immediate rebalance, and continue to run off there. And we'll see when we go into a daily time frame why it makes sense that price could return to this candle's high. So we'll jump down to a daily, and you can see that overlapping with that previous weekly high is a daily BISI within here. Okay, so same deal when you go down to your 4 hour and your 1 hour. If you're not seeing the inefficiencies and PD arrays within those dealing ranges supporting a price move higher, the likelihood is that price will draw back down into the daily BISI here. Okay. Looking at the projections here on NASDAQ, same one. So we're using this fulcrum point right here. One standard deviation was reached there on Friday. Very nice. And so then these three lines right here are just doing that quartering between here and the next standard deviation up there. So taking my 0.25, 0.5, and 0.75 and getting those price targets there. And then I also did this new daily fulcrum point as well, taking the lowest low and the highest high there, swinging it around, and you get 1/2 standard deviation there and then one up here. So I'm using all these areas as price targets, and then I'll use intraday price fluctuations and fulcrum points to kind of align with these and see where the best areas of overlap are, where I can look to take partials. Any questions here on NASDAQ? You do have this weekly BISI still residing below, so if you're seeing closure back below this daily BISI here, then you can gravitate into the volume imbalance here and back into this inefficiency. But still, for the time being, focused on long opportunities. Any questions on NASDAQ?
NASDAQ, one question I have, Henry. I mean, you made a great point that when the prices are reaching all-time highs, we should be looking for long setups. But when we are doing all these projections on the daily and we are looking at these various TP targets, like how do we utilize, the New York AM kill zone to, form our trade idea, right? I mean, these look great on the daily for the targets, but intraday, like, as the price is, let's say, I can give you an example of last Friday, the price started dumping at open, and I mean, I couldn't have imagined that is basically a Judas to keep on, like a super trendy day kind of a scenario, right? I was thinking,
Yeah.
how can I join this short order flow? So you made a point that short should only be scalps. Had I thought like that way, I mean, I would have saved myself some heat, like drawdown. So
Yeah.
how do we change that and join the order flow in the direction of the daily, basically?
Yeah, of course. So you just want to be focused really on if you're still expecting price to expand higher, like we've been expecting on the weekly and the daily charts, and we were seeing that full weekly expansion this week, Monday through Friday, all working higher, then when you get into your New York session, you just want to think about power 3 and how that daily candle or that session candle would develop, right? In order for a candle to expand higher, you have the open, the low, the high, and then the close, which means wherever that opening price is, anything at or below that opening price is the manipulation before the distribution higher. And so the way we identify those is just by looking at your opening prices within the day and within the session. And that's going to be your midnight open and your 8:30 open. So you can take a look at where midnight is. And we'll look at Friday as an example. So midnight is right here. Just looking at NASDAQ as an example. Okay, so I'll mark out midnight right there. And then you want to look at your 8:30 open as well, which is right here. 8:30. So we had a very bullish day, which we've been expecting all week. Because ES had yet to reach up into that buy side as well, but it was in such close proximity that we didn't really want to see super deep retracements. But you can see how when you're looking at the daily expansion, midnight open being the price that the price engine is referencing as the daily opening price, not what you're seeing on your daily charts as 6 p.m., but the midnight open is what is being referenced by the price engine. So you can see that if you're viewing this entire move here as a single candle, you'd have the opening price of the candle, the manipulation below that midnight open, and then distribution higher off of it. Okay, so unless you were awake here at 2 a.m. to be a buyer in the London session, then this would have been tricky to find an opportunity right here. But you wait for the New York session, and then you see how could price develop over the New York AM session and potentially into the PM session as well. And that's what you're looking at that 8:30 opening price for. So this is like your session open. And if we're expecting price to go higher, we want to see a manipulation below that price. So this move, I'm not concerning myself with, because this is just price moving higher. I want to see a manipulation below. And so we wait until 9:30 and you see price drop below that 8:30 opening price. It runs out sell side liquidity here. And then you want to see, do we get new displacement higher off of that and start new bullish order flow? And then you want to be a buyer, ideally at or below the 8:30 opening price. But if you're seeing new order flow and you're expecting price to work up into the buy side, up here and into the standard deviation like we were, then you can find other entry opportunities along the way. So now I'll drop to a 5-minute chart. Oh, go ahead. Is there a question?
I was just going to say, yeah, on my part, I was going to say also, because what helped me on Friday too, because I was able to get a long down there in and around that 9:30 open. If you go to a 15-minute or a 1 hour, there's inefficiencies.
Mm-hmm. Yep. So you're using whatever inefficiency exists below to frame an idea of where price could make the reversal off of. So there was no inefficiency existing down here unless price was going to come all the way back down into the daily inefficiency below, which would have been a fairly deep retracement if Friday was going to go all the way up here. So you're just seeing what inefficiency exists within the dealing range already. And we have that
1 hour,
hourly right there.
in the hourly, there's also a 15-minute one too inside the hourly.
Yeah, so there you go. So price drops down below the 8:30 opening price, below sell side liquidity, into some inefficiency below. And then you could be a buyer right there in theory. Or you can wait to see the new displacement, which is what I typically wait for because it lets me frame a trade with a lower risk or not as wide of a stop loss. So here we drop through the 8:30 open, and then you start to see price trade back higher through the 8:30 opening price and create new displacement to the upside right there. So that's the buy that I talked about on the live stream this week on Friday. So you're just looking for 8:30 to have price manipulate below.
Mm-hmm.
And then as price continues to work higher and show that bullish order flow again, which we're seeing because up candles are being traded and closed through, and we're creating new inefficiency on the way up. That's an indication of bullish order flow. When price drops into it, you can be a buyer, put your stop loss down here. So we've already seen the manipulation below. Shouldn't have any reason to work back through the P areas that are being created and work all the way back down here. So enter here, stop loss down in here, and then you can take it up into buy side up here and into the projection targets right there. Does that make sense?
Thanks. Yeah. Thanks, Henry. Yeah.
Cool. Yeah. Yeah, it can be a bit tricky when you're seeing really heavy expansion weeks and you're not seeing a lot of retracements into your higher time frame P areas like your weekly and your daily. But this is what you want to look for in those cases. You want to use those opening prices and then just use whatever inefficiency or other PD areas you have within those hourly or 4 hour, 1 hour, 15-minute dealing ranges, and identify those areas where price can turn. And then you're just using the opening prices to understand how the actual candle itself forms. So if this is your AM session candle, it's opening, it's forming a wick at the low, and then it's distributing higher. And then as you get into the lunch hour, it's forming the close of the candle coming off the high to make the close.
Michael also talks about how can we expect larger range days. The less price manipulates below the midnight open, so the shorter that daily candle wick is, so you can see how price did not go below the midnight open a whole lot, which is showing technically a low stubby little wick. The more you see price stay in and around that midnight open and it doesn't go that low below it, you can expect, right? You can see from midnight open, price dips in below it just a little bit, but then goes higher. That's where you can start to expect a larger range day, because what it's doing is it's not having the willingness to manipulate that low below it. So the closer it is to that midnight open, the more you can expect a larger range day.
Yep, that's when you get those really nice looking expansion candles. Like, imagine this as a daily candle. Right? Just a small wick and then a nice distribution higher. Or here, right? A tiny manipulation below. And then a nice expansion higher. So if you pretend this candle is the full range that we saw throughout the day, that's what you get here. Small manipulation below midnight open, expand higher, have a retracement in New York, back on the London session, and then below 8:30 open as your manipulation, and then continue to expand higher. Cool. I think we have a couple questions in the chat as well. Aiden, do we concern ourselves with the midnight open in regards to trading the New York session? Yeah, you can, because that midnight open is still representing the daily opening price. And so if you're expecting price to trade higher, then you'd want to see a manipulation below the midnight open, and the best buying opportunities will be at or below the midnight open. I think Wednesday, either Wednesday or Thursday, gave a good opportunity with that midnight open as well. It was just a PM session long, but if you look at the midnight open here on Thursday, that's your midnight open. And so if you're viewing all of this as manipulation for an expansion move higher, then price returns to the opening price here, and you can find another long opportunity off of there to take it back up toward the buy side. Let's see if there was an example on Wednesday as well. $8.30, this was a good example of using the 8.30, I believe. Yeah, 8.30 right here. Open. So manipulation below 8.30, and then expansion higher off of that. Okay.
Aiden asked if the 8:30 open and the midnight open are within close proximity to each other during the New York session. Which one would you want to use for the point of reference?
I would align it with some sort of inefficiency, because I'm always looking for a price to gravitate into the highest time frame area of liquidity or inefficiency. So if there was, let's say we had like the 8:30 open right here and the midnight open right here, and there was a NISI sitting right below within a dealing range like this, then the likelihood that it's going to come to here and then go higher is not as likely as it would be to just come into the inefficiency and then work off of that. So I'd use whatever is aligning with the inefficiency. But the way that price trades around the 8:30 and midnight opens also expresses to you how much of a discount or premium price is trading within as well. Like if you are really bullish on the day and price is is trading significantly above the 8:30 and midnight opens already, then you may not even see the retracement back to them. So you have to kind of align it with whatever your weekly and daily profiles are, and then just looking for inefficiencies within as well. All right, I guess we're good on this. Any other questions on NASDAQ or like about anything intraday? Otherwise, we'll jump into the training exercises.
You want to go over? You want to go over yours first, or you want me to go over mine?
Yeah, I can look at mine real quick. Let's see. I think I took it on. MNQ. See what mine was. I had this was one that was taken on the live stream. I took a losing trade, and then I'll briefly look at how we were able to mitigate it afterward as well. Oh, I got to put my executions on it. There it is. Okay. So this was the framework that we were working off of on Wednesday, which is good because this is an example of what we were just talking about with 8:30 opens. 8:30 open is right there. Price manipulates below, down into inefficiency and liquidity below. Starts working higher off of it. And then I jumped here into a 1 minute. Oh, it doesn't show your executions if you go to replay. I have to scroll back. Okay. So working off of the below 8:30 open, runs out sell side, moves higher here. We're seeing bullish order flow continue, and we're trading through premium raise. So I'm going long here inside the inefficiency and inside the mitigation, and then expecting it to work up into buy side. And you can see that I went long right there in this inefficiency here, and then took a stop out here below this lowest inefficiency here. So I just premature to it here. We drop back below 8:30 open one more time. And then this is where we were able to see how to mitigate the loss on the following trade. So looking at the 10 a.m. open right here. And we're viewing this as a 4-hour candle because the 4-hour candle opens at, within your New York sessions, you have the 6 a.m., 10 a.m., and 2 p.m. 4-hour candles. So you can look at that the same way we look at like a daily range expansion using the midnight open or the AM session expansion using the 8:30 open. You could look at that 4-hour candle using your 10 a.m. open. So price drops, manipulates below, back 30 through the 8:30 open as well, and then starts expanding higher. And as soon as you see the bullish order flow, you can be a buyer again in here, 10 a.m., or in here inside of the breaker. So when price is inside the breaker, it can accumulate to work higher. And so easily, with half the risk of the trade, you can mitigate the previous loss and realign yourself with order flow to take price higher as it was expected. So it just allowed one trade on the exercise this week. So I stopped there after taking the premature entry, but you can see how order flow does continue to work higher and you can mitigate it there. All right. Any questions on my trade here?
On that 1 minute, as that price dipped below the 10 a.m. Open, and then it started running, it never came back. All the FVGs over there on the 1 minute are breakaway gaps. So how do you enter? You just do like a market order on that bullish breaker at the top, like around 760, the 17,760. There's a bullish breaker.
There's a lot of entries you could take. So it depends on what you see and makes sense for an entry, but I can just point out a few. So we have a this E right here, which we trade back through. So that would be a buy right there at consequent encroachment. You also have this being your mitigation block. So you could buy anything inside of here if you're expecting price to go higher. You can buy this right there on this candle as an immediate rebalance and inside the breaker right here. These are all buying opportunities. You can buy this candle again at the high end as it taps back into it. Right there.
Mm.
And then on a higher time frame basis, if you're viewing this on like a 15-minute chart, for example, you're now inside this range here as a breaker, and this can also be a buy with a stop loss down below here.
It is very hard to Ron John's point, when price, you got to be very quick and you can't hesitate on entries here, because especially like on a 1 minute, like we're looking at right now, like price is not waiting around these entry areas. If you're not there ready to push the button at that specific minute, it's gone. You blink and it's gone. So it, even though there are a decent amount of entries that are available, they are a little bit harder than usual, just because price is not giving you time to really think about it or wait for it. I mean, it's touching and going and it's not coming back. So those, I have found that those can be very, very hard. And they tend to also, you've got to realize too, they tend to also not offer the best entries, and entries aren't everything. But, you know, we as traders, we like to think like we want to be buying on down closure. And we have to realize that that's not always going to be the case, right? In this case, you're going to have to probably, in almost every instance, be buying in some form of up closure. So keep that in mind. You know, as traders, we want to always be buying on down closure, but we know that in some market conditions, we're going to have spooling price higher and lots of breakaway gaps. So with that being the case, sometimes you've just got to be, you know, you've got to, know that ahead of time and kind of be very, very quick with your execution on your entries. But by no means are these easy entries. Even though there's some of them that are there, they are by no means easy at all.
Yeah, it is a bit trickier. You do have to be more nimble in conditions like this, but you do have those opportunities where, like, even this candle here and this candle here were down closed candles at one point in their formation, right? It's down closed as it goes from the opening price to the consequent encroachment here of the BISI. That can be a buy right there. This candle is a down closed candle into the midpoint of this wick and inside the breaker right here. So you do have to be more nimble. I think there's two ways to really approach it. The first being, if your model doesn't present, then there's no trade opportunity. And that's totally fine, because there's going to be later opportunities in the day. And you would be able to find an opportunity per se in here when price returns back into a discount. And then you can find a buying opportunity within here, or within here, or within here, or here. You can find something in there. So if you miss it, that's fine. The other way to approach it is you can put on a starting position if you're expecting to work with order flow. So let's say, for example, you wanted to build a position of 5 micros. You can buy, even though it's an up close, you could take your entry of 1 or 2 right here. And then if price does return into the BISI, then you could add the rest of your position. So you might be in a smaller position if it runs away without you, but that's fine. You still can participate in the price move. How do we avoid premature entries? I took this trade, took the change in state of delivery. LL, I'm not sure what LL is. That spooked out when it came back in.
Lower low.
Oh, lower low. Took the change in state of delivery. I'm assuming you're talking about an entry within here. Maybe you can give a candle time for where you're looking at your entry. But I think the way that one would be avoided like this is just waiting for a specific time window. So you get the better expansion here after we get into 10 a.m. And you can kind of look at your candles and likely see. All right. right, on an hourly. So an hourly candle, the 9 a.m. just working higher through the buy side and then closing within this range. But you don't see that when you're on lower time frames. So if you were already expecting the expansion to start running off of here, then sometimes part of trading is that you're just in a losing trade. And that's totally fine too, because we look for opportunities to mitigate it. And with proper risk management, it doesn't matter if you take a losing trade because you can get it back in the next opportunity. But I think a lot of times, if you're waiting for the expansion that's going to occur, most of the time you see that take place within that 10 a.m. or 2 p.m. 4-hour candle if you're trading in New York sessions. So it can be a good practice if you find yourself getting caught up a lot within the opening range, so between 9:30 and 10, to just wait until 10 a.m. Just don't take anything before 10 a.m. and then wait and see where that manipulation goes for 10 a.m. And if you're expecting price to continue working higher, then just wait for manipulation below the 10 a.m. opening price. And then as it trades back above, find your entry model and take it higher. Side question, if you were to trade just purely silver bullet rules on that large expansion Friday, how would you have done so? Okay, I can look at Friday real quick. Friday. Yeah, Friday was really clean. So here you have 8:30 open, and silver bullet would just be taking an entry between 10 and 11. So this is the exact trade that we talked about on the live stream, was the silver bullet actually. Here's your fair value gap. We can see order flow is working higher. We've dropped below the 8:30 open. We're expecting higher prices based on the daily and the weekly and the monthly time frames. We're trading through premium arrays right here, being these SIBIs and these up close candles right there. So when price drops back into that inefficiency within 10 to 11, and we're expecting price to work up here, that would be your silver bullet right there. Nope, the fair value gap does not have to form within that window. It just needs to return into a fair value gap inside that window. So that would be your buy there for the silver bullet. And then let's say you don't get that one. You could drop down to a 1 minute from there. And we'll say the draw liquidity is still above this high. Buy side right there. So you don't get that 5 minute buy. It works up higher. Here you have the wick being the mitigation block, and you have your another BISI right here, which price trades into. You're still within 10 to 11, and the draw on liquidity has not been reached yet. So you can buy right here in this BISI, and I would just put my stop below the wick because I'd allow it to work inside this as mitigation. So it'd be like this, buying somewhere in here. Let's say we can get somewhere in there, and then having my stop loss down in here, and I'd look for price to trade up into buy side liquidity, and then you can reach for those standard deviations that we had, which was at 96, I believe. So something like that. And then if you sell out part of your position, you just go to break even, and you can hold it for a larger expansion of the day. Would a good prerequisite for the trade setup be price sweeping any time based on liquidity? Would a good prerequisite for the trade setup be price? Oh, sweeping time-based liquidity. For the silver bullet setup, I'm assuming you're talking about the silver bullet. Yeah, so sometimes your silver bullet trade is a 2022 model trade in a sense. Like this would be a 2022 model as well. Purge of liquidity, shift in market structure above this swing high. and return into a fair value gap. But the thing I focus on most with trading something like a silver bullet is just identifying where the draw on liquidity is and identifying that order flow is moving in the direction of that draw on liquidity. And then as long as it hasn't been reached yet, which it hadn't been reached here or when price was trading in here, you can enter in whatever inefficiency is available and take it to that level. Prior to 10 a.m. Yeah. Yeah. Go ahead, Ranjan.
The last trade that you just explained on the 1 minute, where you would have entered in that inefficiency, knowing that DOL is the buy side liquidity above. When the algo starts pulling, what makes me hesitate when it's that close to the buy side liquidity is it's in a premium, so if we take the dealing range from the top, like swing low to that top, it's in the premium of the range. And even if there is an FVG, it can quickly come down to like a deeper discount and then go and reach the BSL. And I've been burnt many times taking like FVGs at the premium. So as a practice, like good habit practice, is it okay to take those FVGs? I mean, how when the algo, because I've seen this on Fridays, it's like Fridays are usually like super trend bullish algos pulling days from my journals. So how do we join that? I mean, is it okay to buy in premium because too much premium?
Yeah, you can view this as a last opportunity for accumulation before running up into the buy side because it's already in such close proximity to it. If it's going to reach up into here within the hour, it doesn't make sense for it to come all the way back down here first. So you may have to put a little bit of a looser stop loss if you're being a buyer up here. Like you don't want to put your stop right here necessarily, but you could have your stop down below here, allowing for the up closer to trade and the wick being right here as your mitigation. And you can see that you're getting candle bodies all closing within, and then you just continue to work higher.
I also would say too, one thing on that too, if you're going to utilize those types of entries, just lower the risk a little bit.
Yeah. And you can look to pyramid as well, right? Like if you could talk about or do what we talked about with Wednesday, where it just ran without really providing a lot of entries. If you're going to build into 5 micros, for example, then you could say buy 1 or 2 within here. And if you get a deeper retracement into discount and some inefficiency below, then you can pyramid your entries within there.
Sure, thanks.
Any other questions here, or I'll pass it to Carson? All good. Okay, sweet.
All right. My turn. Alrighty, so this is my trade setup. Took place on Friday. It's actually in and around the same area that we were just talking about. So we had this high that matched up with the 1 hour DISI. Right? So we've got a high in the form of buy side liquidity. We kind of played in and around it, displaced through it, right? So when I see these old highs match up with higher time frame inefficiencies, my eyes get drawn to it. When you go into a 14 or a 15 minute, you see another inefficiency in here, right? With the idea that, right, we had our midnight open, right? So we were just looking at this, right? You have midnight open. The idea that price came in, barely came into here, displaced lower. We've got a low area where price has been in and around midnight open already, with displacement following that. So I had that marked out. When you go into a 5 minute also, when you go into a 5 minute, you can see there's more displacement in here. So really, after looking at all of that stuff, when I'm looking to see where the hour is, where the 15 minute is, and where the 5 minute is, right? All of the things that really were nesting to me were right here within this 5 minute, right? So everything's inside that, plus the buy side liquidity that we're targeting in here. right? So basically what I did was to wait to see when price delivered below it, right? You've got sell side liquidity resting above it, right? So price at 830, if you grab 830, right, that's the 830 price. We were just looking at all this. Right. My main idea, first off, my draw. Where was my draw? Person, why did you only play so much of it? Well, it was Friday too, and I only was playing towards the draw on this city. So my take profit was actually the 830 open, right? So I was only expecting price to trade from this 1 hour, 15 minute, and 5 minute inefficiency back up into here, right? So when you go into a 1 minute, right, I'm seeing how price is closing in here, right? Notice how we're respecting all of this closure on a 1 minute, coming in here, but really my entry was on a 15-second, right? So I'm sitting here and I'm watching this on a 15-second, right? All of this, I'm waiting for price to displace. Price displaces higher in here. I'm still waiting though. I'm still waiting because there's nothing super clear here. There's a little tiny displacement in here, but I would want to see. There was also a volume imbalance, and there was no really area for my risk to go in here besides the low. So I waited for price to show me a low in here with regards to if you were to sit here and take this low to this high. I wanted price to then, following the break of structure, I wanted it to displace following a return into discount. So we returned into discount, and there is a 15-second BISI right here, right? So 15-second BISI right here. I'm getting in right there. You can see my entry is right as we deliver into there. My stop loss is right here. Right, that's my stop loss. So this was my trade right here. Hold on. This was my trade in here. And you can see once we delivered back up into that 15-minute, right? And this is a good example, and you guys can see right here the business. So I'm gonna have to figure out time. This trade right here was that does not count. So I've got to figure out a way to mitigate $841 because this was a trade that I accidentally had a sell limit open and it got tagged. I forgot to close it out. So this, I'm not accounting for this right here, but this was the trade right here that I had traded. And you know, look at how much I missed out on, right? Look at how much I missed out on. But I want this to be a lesson to you guys, right? This should be a very good lesson that you do not need all of this, right? This is not needed, right? It was Friday, right? It was Friday. And even though everything was lining up, I only wanted a very short, quick entry and exit in the market, right? I didn't want to spend all day looking at the markets and all that stuff. And I wanted the most low resistance, high probability setup. And that was the way price was trading from this 1 hour, 15 minute, and 5 minute BISI and old high. After taking sell side liquidity, the odds and probability of it at least trading to this 15-minute inefficiency were very, 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 very high, right? And I want to show you guys that it is okay for you guys to not have to try to be as much as you see myself or Henry hold for trades, right? In here, this time and time and time and time and time and time and time again will be a killer, right? It will be the best thing that you ever do, right? So with me only having one trade, whatever the case is, I just full pulled it from here to here and I took out and that was it, right? Is there anything wrong with this trade because I missed all of this? No, right? This is a perfectly fine trade, right? I'm okay with this trade, right? I closed my charts and I was done for the week. Did I have some form of feeling that I missed out on a bunch of it? Yes, because I did miss out on it. But that doesn't have to equate to me feeling like I did something wrong or that I need to do something more next time, right? I knew that I was only going to get, I knew where price could have traded to, right? I knew exactly where price could have traded to, but at the same time, that's not where I had wanted price to. I wanted what I wanted out of the market and I got that. And for me, that is enough, right? And being okay with that is enough. Yes, there will be trades where I hold for longer, whatever the case is. But I just wanted a really quick, simple trade. I did not want to be I didn't want to be in the market past 10:30 a.m. It was Friday. I had stuff to do, whatever the case is. This is enough, right? This is enough for me, right? This is okay. I was only in this trade for literally 3 or 4 minutes, right? And I was able to get what I needed to out of the market. And from there, I can walk away, right? So this was my trade entry for the week, seeing how we traded, right? We had a 1 hour. Based on what the midnight open did, we had a 1 hour, 15-minute, and 5-minute BISI all sitting in an old high in the form of buy-side liquidity, right? We had sell-side liquidity resting right above it. We come back in. Notice the candle bodies, even on a 15-second. Everything is respecting the consequent encroachment. I wait for price to displace back into these SIBIs. I then grab from low to high to see where our discount is. I wait for price to trade inside the discount, displace away from it. I'm waiting on this displacement, and when price down closes back into that displacement, there's my entry right there, right? And then from there, I'm just targeting the very next place we could go, right? Which was that 15-minute inefficiency, right? Not only can you use highs and lows as draws, but you can also use inefficiencies, right? And that was, for me, the easiest, most low resistance. That was the very next PD array we could draw to. That was the one right next door, right? And that's all I want. If I'm not going to be in the market for long and I don't want a lot out of the market and I want a very high probability, low resistance run, odds are you're going to be a lot more better off if you just go to that next door neighbor PD array, right? And for this instance, it was that. You cannot feel as if you are going, you can't fight this, right? You can't fight the fact, because if this was something that this is what I signed up for, right? And I think the lesson here is when you sign up for a trade, you sign up and you sign off, and you cannot be in demise or regret with whatever happens following, right? When I see all this, what do I first think, right? When I see all this, it did what I thought it was probably going to do. But just because it's what I thought it was probably going to do doesn't mean I have to capitalize on it, right? I'll have plenty of trades throughout the year that'll be like this and whatever the case is, but I have to remember the conditions that I was in, right? It was Friday, right? And I don't trade a whole lot of Fridays. I had already traded live throughout the week and I was profitable on the week. So I just wanted to get in and get out on a very clean trade, right? I was kind of, the past 2 trades that I had traded on this account were also kind of shaky. My management wasn't that good. So I was wanting to make sure that I just get one good, easy trade that I can, take into the very next week. And that's all I did, right? That's all I wanted, right? I ended on a good win. That's to show you that this is okay. Look at the scale in this, right? Look at the scale within this. That's okay though, right? I know now here's the difference, right? If I had signed up for and signed off before my trade, if I had signed up to take this high or take its standard deviation up here or up here, if that's what I was aiming for and I didn't necessarily get it, that's okay, right? That's totally okay. I need to then go back and see what I could have done better to hold. But if this is what my expectation was on the market, then I did what I needed to do. There's nothing that needs to be changed here, right? This is what I wanted out of the market. There's a reason why I scaled in at 15 and I scaled out at 15, right? If I was expecting to hold more, I would have only scaled out 5, right? I would have scaled out 5 here, and 5 at a standard deviation higher. But that's not what I wanted out of the market. I wanted to take it all out right there. So even though there's no form of regret, there's just the acknowledgement that I knew beforehand that I could potentially miss the entire range of the day. And that's okay. I didn't want the entire range of the day because price also could have stayed and consolidated in this range or gone lower to then go higher early in the week following, right? We don't know. Just because this happened in hindsight after the fact, we can say, yeah, it happened. In the moment, you do not know. So I'm helping myself by just sitting here and saying, you know what, I'm going to wait, right? Could I have also done on the 5-minute, right? After this trade, could I have gone in again right? If I was trading the session and I traded this, could I have gone in again on this entry that Henry Tape read for us? Right? Could I have gone in on this entry? Of course. But that wasn't the trading exercise. I only had one trade. So I traded from down here to right here. Any questions before I go into the other ones? Yeah, like you want to have an idea of, what do I want out of this trade? I should know the best possible case scenario and the worst possible case scenario of my trade before I go in. Sometimes I'm holding for longer ranges, and I know that, so I've got to hold and stuff like that. But I also have areas and times where I just want a little bit out of the market, and I'm okay with what could happen following, right? Because what if it came into that 15-minute inefficiency? What if it came into that 15-minute inefficiency and then dropped? Then I look like a genius. You have to understand that, right? So my biggest takeaway here is two takeaways that you guys can take away from this trade. One, you do not need to capture the whole range. Two, you must have everything prepared for what could potentially happen and what you're expecting out of the trade, right? Where am I going to be taking my partials? Am I taking any partials, or am I full pulling? If I'm full pulling, where's my area, right? Sign it up and sign it off every single time. That way, when this did happen, it was not a, oh shoot, I should have held. You don't want that mindset. It was a mindset of, okay, I'll know next time, right? And maybe going into the next time, it's just a partial, but that wasn't the training exercise. I decided to wait till Friday, right? I decided to wait till Friday to trade on this training exercise. The training exercise was only one trade. So I would be a fool to try to hold that one trade for the whole entire thing. Yes, I could have taken partials, but also I trade for my time. I want to be in and out, right? It's okay. And I was already out of the market. Being content with enough is such an underrated skill. You have to be content, right? You have to be content. I was content with this, right? And quite frankly, if I was content with it, what good do I have? What good am I doing myself by continuing watching the market? Odds are, when you're fighting that content, it's because you're still watching the market. I closed shop. I didn't watch the markets. I went back after the fact, after the market closed, and I went back and I looked like, damn, pretty cool. Now I can't do anything about it. The market's closed, whatever. I already got what I wanted. It's not a form of regret or a form of I should have done this or should have done that. If I know that I'm only going to get that amount of the market, I know that two things are going to happen. Either I'm going to get exactly that and it's going to continue to go, and I'm only going to get a tiny piece of a large range, and that's okay. Because where in Michael's teaching does he say that you have to capitalize on the whole range? Right? And then also, what if that didn't occur and we went and filled those inefficiencies and then fell or consolidated? Because what did we have done all week? What did we have done all week? Right? We had been expanding, going higher. So yes, a part of me is sitting there and considering the fact that we could return into the weekly range. So I have to take, in the moment, I have to think that. I have to think of that devil's advocate. I have to be a piece of that. And if I'm trading, or I'm trading live, or I have more opportunities, guess what I do? I get in again right here. Right? That's totally okay. And guess what I do? I take it to here. Maybe leave a little runner. But at the same time, I wanted to just let you guys know that this is okay. I will go ahead and go over some training exercises from you guys this week. Hopefully that was insightful. All righty. Let me go here into this week's. Right, so the whole idea was just one trade. Right, just one trade. All you had was one trade. So Mr. Ravi allocated a challenge account for exercises and took my first setup today. Won't touch this account until next exercise. So yeah, if that's something you guys want to do, that's totally fine. Reasoning, there was bearish order flow on the daily and weekly. EU was retracing to a 4-hour fair value gap deviation above true day open, and London Open was watching for shorts. SMT with DXY. EU had tapped a fair value gap. DXY didn't, showing strength. Followed the breakdown was a trigger. It was a 25-minute trade. He sized in at 8 lots. He had a 2 RR for 13 pips. It was at 4:30 a.m. I'm assuming somewhat late than my usual, but didn't get an entry earlier, so you had to wait. That's good. Note that. That's good. That shows patience, right? That's something that I actually had been fighting a little bit this week, back in the market for the first time over in 10 weeks. It's the patience in those premature entries. That's something that I was kind of fighting with this week. PDO raise, you had a 4-hour fair value gap stacked with a 1-hour breaker. The draw on liquidity was the previous day's low. His emotions before was the low resistance liquidity move is usually my favorite, but market did not give an entry that led to me keep watching for any fair value gap being mitigated. I was anxious that my favorite setup would leave without me. However, I did not get my entry until later during that session. Emotions during. Had doubt that after the next 15-minute candle close, felt confident again and left it to do whatever it wanted to do. Either way, I would have let it hit TP or stop loss, letting it breathe. Emotions after, felt a bit happy, which I shouldn't have, so I decided to leave screens and focus on something else. Very good note here, right? If you feel any form of emotions, just leave. Didn't take partials as I usually take 2R trades, and I usually personally don't to break even based on my data. That's totally fine. You can see his trade in here. He shorted up in here, had a little bit of drawdown in here. Probably was able to give room to breathe up into these highs because you had a SIBI in here. Very good exit. Very good exit, right? So once price delivers below that previous day's low, right, in here, yep, he had his stop loss in here, allowed price to trade through here. Price is drawing towards this previous day's low, right? So his price is drawing through here. It's drawing into the previous day's low, right? And look how he's taking partials, or not partials. Notice how he's taking his profit at that fixed risk to reward. So it doesn't need to draw to below it, right? It doesn't need to draw below it. It only needs to draw to where his fixed risk to reward is, and that's totally fine. We don't need, because think about this. If he would have let it draw all the way towards it, look at what he has to endure. This, and this is not fun, right? While it's already there, if you can take some partials or take your profit, you might as well while it's giving it to you. Great trade. I think it's a great trade for your first one. You have any questions, comments, or concerns here, Henry?
No, I think it's excellent.
Good trade.
Well done managing risk, and yeah, I like that you were willing to take your profits before reaching the draw. That's
Yeah,
great.
for sure. And here you can see he's got this low resistance liquidity run that was already taken,
Setup.
showing you where order flow is and efficiencies in here. Very good stuff.
Already ran the buy side into that higher time frame and efficiency
Yep.
up there.
Noting the SMT. Good stuff.
Good stuff.
Alrighty, Mr. Ranjan, a 31-minute trade. 1 contract on ES, 2 more short orders didn't get filled. That's okay. Risk to reward was 1.5 in the New York AM kill zone, 1150 to 1210 macro. Specific PDO arrays used. He used a 5-minute bearish order block and a bearish SIBI after displacement and market structure shift. Specific draw on liquidity target was the most recent swing low, sell side liquidity, stop placement above the 5-minute fair value gap. Partials taken, I got my first entry in the 5-minute order block. 2 of my orders at the 5-minute fair value gap and consequent encroachment of the 5-minute fair value gap did not get filled. That is okay. So I didn't have any opportunity for partials. That is okay. Note that it wouldn't have mattered as it is a losing / break-even trade. Time of break-even not used. Emotions before the New York AM was very choppy with both DXY and indices moving in tandem. That should be a note. Is this a good time to trade? Right? If you're seeing everything move in tandem, that should be a note that you could potentially get some choppy price action. That would be a good note. If you notice that, don't trade, right? Or wait, right? So that's something there. The mixed market conditions made me wait potentially for a trade. But once you saw displacement on a 5-minute, I knew we were going to take out sell side liquidity, right? I would also refrain from the idea of saying you knew, right? Because we never know, right? Just notice your language here. I knew. That could be harmful, right? That's harmful language, right? You expected. There was also SMT divergence with NQ. I usually trade NQ but for the first time I switched to ES since ES was weaker of the 2 indices. Was very calm and poised as I entered the trade. Emotions during the trade chopped for a long time, and my 2 short orders also didn't get filled. Also wanted to see a swift run into the sell side liquidity during the macro. When it started spending too much time in that area, I started feeling uncomfortable. I cut the trade in a small loss. I like that. That's okay. This is good, right? This is good. That's that instinct, right? That we've been talking about, that instinct, the idea that you're not seeing what you want to see. So you're going to do the most important thing you can do, which is mitigate loss, right? Emotions after the trade. I'm glad I cut the trade in small loss right before the displacement to the upside. First time I listened to my gut feeling and cut the trade, which was the right decision. I need to still work on avoiding choppy market conditions, right? That feeling that you got, that you didn't see what you exactly wanted and you cut the trade short and it ended up hitting what would have been your stop loss, that almost feels like a win, right? And that's what I was trying to get to you guys, is that if you can get in that habit of, if price is not showing you what you're expecting or what you're wanting, and you're able to mitigate some, if not all, the risk at a small loss, or at least smaller than what your original loss would have been, that feeling of when it does actually go lower or higher and take out what would have been your stop loss, it feels like a win, right? Because what happens if price does go in your favor? You can then look for a re-entry. Obviously, this exercise was just one trade, but in general, in your trading, right? As price will then, maybe price just was distorting when you were looking for an entry, distorting time. As price then displaces in your favor, you could then look for a re-entry, right? That's totally okay. So this is good. This shows you know, an increase in maturity and an increase in knowledge of reading price action, right? So that's very good. You can see in here, he had this market structure shift right here with the SIBI, right? Shorting using the 5-minute order block. So he's in here, price pushed up into here, displaced lower. There's a fair value gap inside of it. He shorted it, and notice how price is in here, just chopping, not taking the sell side when he thinks that it should have already. Price displaces in here, right? You can see some displacement in here, and that's where he takes out in and around here, right? Totally fine taking it in and around break even, because what does it do? Right? You would have been stopped out. And then what does it do? It ends up not, you don't get anything that goes within your favor. So you did the best possible thing that you could have done. This trade to me is a win. Henry, you want to touch on anything?
I like it. I think you did the right thing to mitigate there. The only other thing I'd say is I would love to see the focus of your trades be in line with the higher time frame bias. So rather than looking for a short in here, wait until you have a clean long opportunity. And then see what kind of results you can get with focusing on only trading on the side of where you expect the daily and the weekly candles to expand toward. But I think you did the right thing to manage it well, to manage your risk here and cut it early. And you should be proud of that.
Good stuff. Yeah, you want to focus, even though you see this stuff, right, with regards to the displacement lower and the market structure shift, and even though, yeah, you're aiming for a very small scalp, try to have that mindset shift of, all right, higher time frames were long. Guess what? I'm only going to go long. I'm only looking for long opportunities. I don't care what setup shows me on any form of short. I'm not going to take it. I can tape read it, and that's fine, and I can get a mental win from it, but I'm only going to execute in the form of a buy. Something to note there. Alrighty, Miss Kate, narrative. Monday and Tuesday were inside days relative to last Friday. Still, I saw some bullish signatures on the higher time frame that made me confident we could keep pushing for the highs. After price broke above the previous month's high and all-time highs with a BISI, I thought we could go from I don't know what ERL is. Henry, do you know what ERL is?
External range.
External range
External
liquidity
range.
back down to internal range liquidity before resuming back up. So this is kind of where she's looking at right here, right? We have a BISI. This is her idea, right? In context, we deliver back into here, right? After breaking the previous high with a fair value gap, right? We closed above a higher time frame SIBI right here, right? With a BISI right there. And then this is unable to take sell-side liquidity from Monday. So she's noting this. This is her identifying the weekly structure and what could potentially unfold later in the week. When I saw price bounce up after hitting the 1-hour BISI consequent encroachment, I marked it and put my stop loss below the 1-hour BISI. Emotions, before I was neutral. I knew what I wanted to see, so I just waited for price to get into my POI. During, I accidentally entered using micros because I was using the micros chart before my personal account. Other than that, I felt good with my entry and how price acted afterwards. I didn't move my stop up after taking the first partial because I knew there might be shenanigans with the 101 bond auction. After, I was annoyed that I didn't take this trade with minis, but then I reminded myself that the P&L is not the point of these exercises. I got 34 and 55 and 3/4 handles out of this trade. Both are above average for me. My last contract was stopped out in profit the next morning. I love it. So you can see in here, right? As price delivers down into this area, right? All stops. She's waiting to see, I'm assuming she's waiting to see this low form. But as this is forming, obviously it's below the entire BISI, right in here on the higher time frame, right? And below this previous high. She's getting in here. And then from there, she's taking a partial in here. And she's taking a partial in here. Not necessarily needing it to trade here, but holding a runner, moving her stop. Once she takes this partial, moving the stop to this low, right? The candle body's within this low. And then from there, trailing the stop one more time in here, right below this BISI right here, using this as a breaker, expecting price to use that as support. And you can see she takes one partial right here inside the SIBI, takes another partial in here at these highs, and waiting for it to draw in here. And then I think this probably stopped her out, I'm assuming. Oh, no. Overnight, it came back lower. So she just was holding, and then it stopped her out. Same thing in here on a higher time frame. You can see she's holding that trade at break even there, and it stops her out, just going right back to her POI and then trading higher, and that is okay. In here, same thing. You can see the business, right? Partials pay. I should have added commissions on mine. But overall, still profitable, still growing that account. All good there. Equity's been higher. Any comments,
Yeah,
questions,
nice
or
one, too.
concerns here? I like, and I'm going to note this. I like that you are starting to hold overnight. Yeah. You're swing trading a little bit. You're starting to get in that mindset of holding some stuff. So I think that I've never seen you hold one of these trading exercises overnight. So I will say right there, that is a win, right? And you're just getting the feel for it, right? You're getting the feel for it. And I think that's cool. You're starting to press yourself even more, right? You're starting to press yourself even more with the idea that you're going to hold at least a little tiny piece of it and just see what it does overnight. So I think that's really good.
Yeah, I like to see that too. It's a good step in your growth. We're seeing it in intraday too. I like to see you holding through these larger.
Yeah, I was going to say your
price
intraday
swings.
in general is just already getting larger. Like I remember a couple months ago, you would have taken out right here. Right as price went right into the SIBI, you would have been taken out. So you're just still overall holding, right? And even though you did take out in here, you held for a partial, right? You held for this, didn't move your stop loss until you're kind of getting in that mindset of take a partial, but you don't always have to move your risk and let it breathe. For those larger ranges, you got to let it breathe. Anything else
Really
here,
nice.
Henry?
No, I think it's good.
Good stuff. Okay. Exercise 22. This one's going to be a little bit harder this week. So this week's assignment has to do with percentage gains. If you are currently in profit on your account, try to gain 3% on your account size this week. If you are currently in drawdown on your account, try to gain 1.5% of your account size this week. The only time restriction is Tuesday at 8:30 a.m. for the CPI release. Here's the caveat. You decide the limit on how many trades you take per day this week. You also decide the limit in risk percentage per trade /day this week. We are not telling you how much you risk. We are not telling you we are not telling you when to stop. That is for you guys to decide. So be responsible. Obviously, your account balance rolls over and stays the same from the prior week. It is up to the trader to calculate the contract and lot size. Please submit all the trades you take, right? So the goal is that if you are in profit, aim for 3% on the account. 15 minutes before and after CPI is off limits. If you are currently in drawdown, aim for 1.5% on the account. 15 minutes before and after CPI is off limits. You should stop once you reach these goals, but we are not telling you what we think your max drawdown should be for the week. We want you to decide this week. If you go negative on the week, we want to see where you stop. Target a specific liquidity pool or inefficiency. Obviously, that's what we want you to start to target. At least 5 handles on ES, 10 pips on Forex, 40 handles on NQ. We obviously moving to break even is welcome. Partials are welcome. Always using a stop loss and journal everything as usual. Right? Any questions, comments, or concerns here? We are not telling you where or when to stop. We are not telling you where or what to risk. We're giving you guys a target, right? If you're above in profit, try to get that 3%. If you're in drawdown, try to get 1.5%. We are not telling you what to risk, and we are not telling you where to stop. We want to see that. Fun but dangerous, right? Yep. We'll see. We will see, right? I want to see how you guys react to not having any restrictions. You make your own restrictions, right? So I need a trade limit to not go off of. Yeah. There's no trade limit. No trade limit, no risk limit, nothing. You guys make them. Full port. No, don't full port. But you guys get to decide it, right? So if you guys come here and half your account's blown, we'll have some stuff to talk about, right? And we want to know inside what you're risking, right? What were you risking per trade? What were you risking per day, right? All that stuff. We want to know this stuff. So hopefully this one will be insightful. This one obviously has the it has the potential to you now have the potential to spiral, right? You're not being told when to stop. So it is up to you, right? Try to go get that 3%, try to go get that 1.5%, but it's up to you on what you want to risk and where you want to stop, right? We're telling you where to stop if you win, but we're not telling you where to stop if you lose. We want you to start to do that on your own. Now, this is just a training exercise. We'll incorporate other things, but there you go. Any questions, comments, concerns? All right.
It's good to discipline and self-awareness. The things that we've been learning throughout the past 21 exercises now. Right? There's more to these exercises than just learning how to find a model and click the button and how to take partials and how to manage a trade. It's how to manage yourself too.
3% growth is a lot in a week, but guess what? It's doable. It's doable. Think about if you're, I chose 3% because it's doable. That was the biggest thing, is it's doable. You could trade 3 different days and you can go for 1%. 1%. You could do one trade and try to gain 3%, or you can do 3 different trades and try to get 1%, right? You use a 1 to 2, right? You risk 0.5% and you go for that full percent. You do it 3 times this week. Boom, you got it. You win 3 trades. You be selective, whatever the case is. So how you decide to get to that 3% is totally up to you, right? You could do 0.25% and 0.5% and have a higher trade, frequency. It's totally up to you. But as we start to do these exercises, I'm trying to get you guys on all angles, right? I want to try to see where you guys are at and what type of traders you guys are from all angles. So I don't necessarily, some weeks are going to be technical, some weeks are going to be fundamental, some weeks are going to be psychological, right? And so from that point on, I want to see who spirals the most. My expectation as the person that's trying to help you guys is, my main goal is to see, out of all these traders that submit training exercises this week, right, who ended up having the most amount of drawdown, right? And at what point did you stop, right? So focus on, know what your target is and what would be a healthy drawdown, and how do you break that down into what you're going to risk per trade, per day, all that fun stuff. So other than that, that's about it for me. I don't really have anything. New week, new opportunities, fresh start, right? You win. How do you win a year? You win a year by winning a month. How do you win a month? You win a month by winning a week. How do you win a week? You win a week by winning a day. So win the day, focus on today, focus in the now, take each day as a whole. Don't think about tomorrow. Don't think about the next trade. Think about the trade that you're in. A lot of times, we want to sit there and we want to use excuses as to why we're not profitable. And I will tell you right now, the number one reason why you are not profitable is because of you. You are the reason you're not profitable. It is not the strategy. Do not sit there and think that the strategy is wrong when you can't follow it for more than 3 trades or 3 months. How can you blame a strategy when you can't even follow it, right? So I think the main thing going into this week is follow what you are wanting to do, right? Whatever that strategy is, just follow it, trust it, stick in it, stick to it, have faith in it. Yes. So the hoodies. So yeah, we're in kind of just a sampling right now. Me and Henry kind of went ahead and just started getting a feel for what type of hoodies, what type of prints and stuff like that. So if you guys actually look right here, if you look on the back,
Yeah, we're playing around with them a bit, but we'll have something up soon.
Yeah,
And Sarah's
so
been a big help with this as well.
yeah,
But
we're gonna have definitely some stuff for you guys. And we are not planning on making any money off of this stuff either. So whenever these do become available, we're going to just sell them at cost, right? So they will be relatively very cheap. You know, I don't want to say cheap, but just we're not making a single dollar off of them. They're going to be for you guys. We're going to have a whole bunch of different stuff, whether it's hoodies, hats, mugs, all that stuff. We're kind of playing with all that stuff there and trying to figure that out. So that's something that you guys will, and they'll be in giveaways too, right? We're going to be giving away stuff, and free merch will be included with some stuff that we're doing in the future also. And who knows, right? That's another thing too, is like the person watching this who's not on the or that's not on this call right now, or that is, right? Me and Henry will be sitting here, and you know, we're gonna just start watching to see who's really active, right, in the community, who's helping others, who's trying to help themselves, who's hopping on these calls, who's asking questions, who's posting trade markups. You never know when you know, we might reach out to you and send you a goodie box, right? That's something that I want you guys to keep in the back of your head too, is that we watch you guys, and you know, the more you support yourself inside this community by supporting others and showing up and doing the training exercises and asking questions and joining the live streams, the more you do that stuff, me and Henry, we take note of who's joining and who's doing what. And you never know, we might sit there and we might ask for your address, and you know, we might send you a little goodie box, and you never know what's going to be inside of it. So keep that in the back of your mind. Other than that, I'm all good. I'm excited to see where this week goes. I'm back live trading. It felt really good this week. I've got some trade recordings posted on YouTube, and you can see there's a lot of errors in there too. I made on my part, right? I'm human. I'm going to be showing you guys as transparent as I can, both my goods and my bads this week. My biggest factor that I noted throughout my journaling this week is I got to be a lot more patient. I got to step away from that premature trade of, is it going to run the liquidity without me, right? Both times this week, I was premature in the market, right? I lost 4 trades and won 2 trades, but I'm overall up about 1.5% this week so far. So I'm okay there. I'm journaling it. I'm noting it. I'm going to be a lot more patient and just going to continue to go. You know, I like to use February as my month to get everything broken in, right? I've been very, you know, away from the live trading experience. And so, you know, I don't expect my best trading in February, right? It's not going to be my best trading. I'm breaking some things in, and it's going to take some time to build that into. So, you know, hopefully I try to get everything that I can kind of fixed by the start of March, and then going into March, hopefully I'm ready to rock and roll. Other than that, that's about it.
Sweet. Yeah. Let us know too what you want to see in the live streams this week. I think one thing we can focus on is that idea of, are you missing a trade opportunity? I've been seeing a lot of messages within the different chats on Discord about people feeling like they missed a trade or didn't get to participate in some kind of trade. And so maybe we'll do one this week to touch on just how many opportunities exist within the day. Because when you start to realize how many opportunities there are, and you can see a whole bunch of different things, then you don't feel like you're missing anything anymore. Maybe we'll do one this week. We've been talking about that 30-second model a lot, so we can go through and point out all the opportunities in a day. You can get like 5 to 10 clean opportunities in a day on something like that.
Would you rather miss a trade or lose a trade? Everyone in the chat right now, would you rather miss one or lose one? Right? So if you're saying that right now, if you would rather miss a trade than lose a trade, then when you miss a trade, don't be sad. Why be sad? You know how many, and that's what Henry will go into this week, is how many trades, right? Imagine if you missed a trade on Monday, and you missed a trade on Tuesday, and you missed a trade on Wednesday, and you missed a trade on Thursday, and you're like, okay, you know what? I'm going to go in and trade today. With my higher time frame bias, I'm going to go in and trade today. You would have been all right. You would have had at least 2, if not 3 areas where you could have probably been a buyer and been profitable. You're going to miss trades. You are going to miss trades. The only thing that's more certain than you missing a trade is you losing a trade. But both of those are so certain, it's inevitable no matter what. Guess what? You're going to miss a trade when the market opens, because someone was holding over the weekend and you weren't, and they're in a trade and you're not. You missed the trade. When you go to bed at night and you don't have a trade in, guess what? You're missing a trade, right? I miss a trade every Monday, multiple trades every Monday. right? It is, the market moves 24/5. You don't trade 24/5. Guess what? You're gonna miss a move. It is inevitable. You're gonna have to eat that and bite it, and just know that I was a trader 3-4 years ago when I was watching oil. I was watching commodities at the time. I watched oil go under $0. I was watching the chart with an account in my hand and didn't press buy. Was wanting to, and I was like, oh my gosh, why is it crashing? Why is it below? And in the moment, I'm like, okay, something's happening that I might not know. I don't think that it's necessarily going to go up right now, whatever the case is. Guess what? It ended up going up. I missed a really big move. Guess what? Almost all of us, unless you're someone that caught it, I guarantee you no one was buying Bitcoin at $10. You missed a move. I would guarantee you, when I first got into trading, Bitcoin was trading at like $900, $1,000. I missed a move. Right? Guess what? None of y'all were buying Apple back in 1999, 2001. You missed a move. Get over that. That should not be in your mind. I missed a move. I was in a trade on Friday. Y'all saw, technically I missed a move on Friday, but did I? Because I still made money. Because not only are you going to miss a move just by not being in it, but there's going to be times, multiple times, lots of times where you're in a trade and you still miss most of the move. That's okay. Like, you're not going to be the guy that buys at the very lowest point and sells at the highest point all the time, 24/5. So you missed the entire NVIDIA and Tesla move. So did I. Right? Totally fine. So just keep that in the back of your mind. Hopefully this call was insightful. We enjoyed doing it with you guys. We'll be back at it again this week. I know you guys are getting a lot of insight from the live streams throughout the week on Discord. Me and Henry are having a blast doing it as well. I know Henry's been having such a blast doing it. So enjoy the rest of your Sunday, and we'll see you guys in the Discord tomorrow.
That's right. Pre-market. Take care, y'all.
Peace.